I'm Lorraine Harrison with About Marketing, and I'm so glad you've decided to join us today to learn more about what to do when you're in trouble with the IRS. We have our resident expert, Mr. Steve Perry,
Good afternoon.
and just in case you'd like to get some backup information, he has written a book on how to stand up to the IRS, and you can get that on Amazon. And so Steve is about, I owe the IRS a lot of money. Where in the world am I going to find it, and what do I do if I don't have it?
Great question. Great subject. First off, you do not have to write a check right now to pay your tax debt.
Well, that's a relief.
Absolutely. You have, well, actually, the IRS has 10 years from the point of assessment of the tax, not when you file the it's actually assessed, to collect. That also gives you 10 years to pay it back.
Well, yeah, payments and stuff.
Absolutely. So, your initial question is, where do I get this money? Well, first, look at your own assets. Do you have stocks or bonds or equity in your house that you could either sell or borrow against to repay it? That's going to be the lowest interest and penalty for the debt.
If I have assets, am I required to sell them?
No, ma'am, you are not. In fact, under federal law, you technically can't sell them without the IRS permission. However, if you were to sell them, like say you had a stock portfolio and you had Microsoft stock, and it's worth way more than what you owe, you could sell enough of the stock to pay off the debt, and the IRS wouldn't complain. If you have a home that you have a lot of equity in, because you've lived in it a long time, and you paid that first mortgage down, well, you can certainly take the home equity loan out if you qualify, because that's going to help you move forward and put the IRS situation behind you. The other options are working with the IRS, the first of which is the installment agreement. An installment agreement is just that. You make an agreement with the IRS, so much money they will draft out of your account, savings and checking, every month for a set number of months, and that will pay off the debt.
Okay.
The IRS thinks these are fine as long as you stick with it. The rules or the trips on them would be you have to keep enough money in the account to make that payment every month. Because if they can't draw out the payment amount, they'll cancel the installment agreement. And then you're into collections again. So if you have a payment that is scheduled to be taken out on the 15th, on about the 13th, or whatever the business day is before the 15th, you need to make sure that that amount of money is in the account without fail. The other part of it is you have to stay compliant with your tax filings, and if you're a business owner, your quarterly estimated payment. If you do those over time, it's just like a car note, credit cards, whatever, then you will pay it off. Now, I mentioned credit cards. One thing I do want to say at this point, I do not advise ever using a credit card to pay off a significant tax debt. Your credit card interest rates, I'm quite certain, are north of 20%. The IRS interest rates aren't anywhere near that high, even with penalties built in. So don't use credit cards to pay off the IRS
Do
debt.
the installment plan instead.
Yes,
It amounts to the same thing as far as you're concerned, because the payments, you still got to pay the credit card company.
that's true, except the credit card company is going to charge you 22% interest
Okay.
or more. I mean, I've seen credit cards with as high as 30, 35% interest. So why would you use a 35% interest credit card against a 7% interest IRS debt?
7.
Depending on the year. It fluctuates. They'll send out a notice from time to time to say the new rate is this.
Certainly less than a credit card.
Oh, absolutely.
Okay. So we have 10 years to pay it off.
From the point of assessment.
Okay. And can we negotiate to get the payment down to really low if our cash flow is tough?
Absolutely. In fact,
Can I work with you on that?
when I negotiate a payment plan, I will start with the lowest amount that will pay off the debt within the allotted time left.
Even the 10 years.
10 years or
9 or
fewer if that's what's left on statute of limitations. If that's still too high, what I may do is go for what's called a step installment plan. And what that is we say, look, my taxpayer is going to pay this amount for 2 years. And then we're going to bump it up to this amount. And as long as it ultimately pays off the debt, the IRS generally will accept it. But it's got to be a really realistic plan.
Are they going to look at the amount of cash you have available, or are you just going to the table to negotiate?
I'm just going with it. There are things where they look at your assets, but this is not one of those steps. The installment agreement just says, look, IRS, I can pay you this much. And quite often taxpayers will say, Well, gee, I can afford to pay twice the minimum. Why don't I do that? And the reason for that is very, very simple. We don't know what tomorrow holds. So if we set the minimum amount, you always have the right to prepay, just like on your credit card, just like on your home mortgage and your car note. But you don't know if next year inflation's going to wreak its ugly head, or you're going to lose a job, and all of a sudden you've got a real cash flow problem. Well, if you have the minimum amount, then you've got no flexibility.
Yeah.
Right. I always ask clients, what is the minimum amount you can make in payment, rain or shine, good times and bad, especially if you're a business owner. When you're a business owner, you know the deal. Some months are great, some months not so much. So we have to take that into account. It's a real balancing act.
Well, it looks to me like if somebody owes the IRS a lot, they need to hire a professional to negotiate this for them, who knows what he's doing, and I know that could be you.
Absolutely. In fact, if it's more than if it's more than a few thousand, if it's more than 5,000 to 10,000, you definitely don't want to try this alone. IRS will let you, but would you let a bill collector dictate terms? IRS is a bill collector. Simple thing. There's a lot of things that we do yourself kind of approach. This isn't one of them. I would wager to guess in most cases you got the trouble you're in because you were doing it yourself.
That's probably right. If you had somebody managing it for you, you probably wouldn't have gotten in the position
right.
anyway. Yeah. So, makes good sense. Anything else we need to know about paying back the IRS?
Well, of course you need to do it. And the only other thing I was saying, we've talked about it in other interviews, if you can't, if there is a reason, a legitimate reason why you can't make payments, either enough to pay it off completely, or in part, there are other options. One of the other options is a partial pay installment agreement. In that one, they will look at your assets. But in certain cases, that's the right answer. If you only have X number of dollars coming in and you have to pay a mortgage, you have to pay utilities, you have to pay for food, maybe you have to care for somebody, the IRS has to understand by law. It's not like they're benevolent and it's going to be nice. No, they are restricted by the law. It's my job to make sure they follow the law.
So it's good to know that there are options. And so if you look at it and you get that letter that says you owe a lot of money, I think you over and over suggest never call the IRS yourself and to call a professional like you.
Exactly.
All right. I think we covered that. Thank you very much. And I hope I don't need you.
Same here, Larry. Same here.
Okay, this one is. Oops, I forgot. Can you edit that out?
We did
Right.
it.
Okay, thank you so much, Steve. And I want to remind you that Steve's book.
Say it again, 'cause I was saying something.
Okay. Thank you, Steve. I know we learned a lot today. And I want to remind everybody that you can get his book on Amazon. And I'm Lorraine Harrison with About Marketing. And tell them how they can get in touch with you, Steve.
I'm Steve Perry, Books, Taxes, and More. Our email, steve@bookstaxesatl.com. My website is bookstaxesatl.com. Or you can put comments or questions after this YouTube. We will get notified. We'll answer. But please, do not put any personal information such as social security numbers, full names, driver's license. Wait until we're actually talking before you do that information. Thank you for listening.
All right. Thank you much.
Thanks for watching. If you found this information helpful, don't forget to like, comment, and share this video. And make sure to subscribe for more great tax tips and strategies from Steve Perry and Books, Taxes, and More. Visit our website at bookstaxesatl.com for more resources. See you in the next video.